afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me, Sajid Sharma as well as Aisha Faridi. And for now, the market is trending higher, 22,500 on the anvil for the Nifty. So going quite smooth into that extended weekend of sorts. And you also have the broader markets, which is actually quite lively today. Not much to complain because there is a move of almost 1% when it comes to the mid-cap space as well, if I have it right. Yes, so 0.5% now. And even the small cap index, the last time I checked, was holding comfortably in the green with a gain of around 1%. Bank Nifty is a bit sluggish today, but after the move that we saw yesterday, maybe it's just cooling off a bit, so pretty much flatline. Though in the last few minutes, there has been an uptick in the Bank Nifty as well. Individual names then that are actually buzzing in the trading session. You can't take your eyes away from what's happening at Tata Chemicals. That stock is up 12% again today. This week itself, that stock is up almost 35%. It's having a rub-off impact of sorts on other Tata Group companies. So whether it's a Tata Power, Tata Tele, Tata Technologies, many of these companies do have their stakes in Tata Sons as well. And the value unlocking is something that the street is watching out for. But the entire group is something which is in focus. We're also watching out for Reliance India, which is of course a step-down subsidiary of sorts of Tata Chemicals. So that stock too is in focus with a gain of around 13%. On the losing side, M&M after that large deal. SBFC Finance again on account of that large deal, they are in focus. But largely these pockets, Aisha. But overall, I think again, it's pretty much, I think, the Friday mode this Thursday.
It is, and it's led by the Tata Group, out and out, like you said. I mean, be it a Tata Chemical, which for a second consecutive day is up 11%, Tata Power, which is 9% higher now, Tata Steel, Tata Motors, Tata Consumer, all of it added to that pack. I mean,
actually,
it's phenomenal.
Tata
Special.
We should do a Tata Special one day where we can go and have a nice meal in one of the Tata restaurants, then go for shopping in Trend, and of course all this should be done in a Jaguar Land Rover or some of sorts.
Nothing less.
So that will be a perfect Tata day. But I must tell you something.
Not a bad idea at all.
Is it not? We should put it on implementation. But I was discussing with some people in the market, one of the key triggers from here on. We are already knocking, or at least looking towards 23,000. 500 points on a 22,000 base is barely something. Small caps have done their share of Shakeout or shaken or stirred. You can depends on what kind of portfolio you have, but whatever has happened. Friday mode. Now the next big trigger could actually be next week. What we are picking up from the street is that 14th or 15th is when the election dates will be announced. And between election date and May election result, you may say however much you may say that it's factored in momentum, this, that, Abki Baar, 400 par, all of that. But the overtures the government is making, yesterday shaking hands with Mr. Patnaik there in Odisha, now doing a Kashmir rally, one of we haven't seen for a long time. All of that, the stance of the market is look towards election triggers or kind of cues. So that could be the big one. And election rally or a case for election rally, or at least cover your short position, deploy your money, all of that kind of stuff will be discussed. So next week.
You also have the financial year compulsions play out. March in any case.
This time it didn't actually.
Hasn't yet.
Right,
and
there are 9 or 12 days actually left.
Still left, and there are only 9 or 12 days left. There are so many trading offs as well, right?
Yeah.
So all of it is going to play out in one go. But Kunal, what do you think of the market construct?
I think it's a very good market so far. So to add to the point what Ajay was mentioning, look at the India VIX drop. We are at 13.7 for the India VIX. That's a clear telltale sign that the markets are looking at much more stronger uptrend or upside over the very near term. Such a sharp drop in the India VIX, I have not seen it at least over the last 2-3 months, and that clearly indicates that the market tilt is on the upside. Yes, with every momentum day, like what we saw yesterday, for example, a very strong intraday recovery as well as a good closing for both the Nifty and the Bank Nifty. We are not seeing a very similar kind of a follow through, but I think that's how the texture of the markets or the uptrend is. The more lower the India VIX goes on the downside, the more subdued you might see the index action, but the more stable the uptrend would last for the indices. So I think it has to be a stronger uptrend which one should be looking out for over the next 1 week, and breaking past about 23,000 next week I think is a very strong or very high probability.
Sorry, which level you said next week?
23,000.
23,000. So 500 points within a matter of weeks.
It's still not in our vocab yet, right?
Yeah, it's not ringing a bell. 22,000 is something that we've just digested, and 23,000, great. We're happy to learn these new lexicons that keep coming in the market as well. But let's go across to Naresh and get a sense. Naresh, do you think the shakeout which was there in the broader market is done with now?
So once we cross yesterday's high, that is where we confirm that the shakeout is done. So as of now, we've recovered well from yesterday. But more importantly, the fact remains the index is continuing to do well. And over the last 3, 6, 12 months, the small caps had outperformed the index. So it doesn't really matter that small caps also end up doing a lot of outperformance. We could get into a period where large caps outperform. And that is the period I think we are in right now. And we are seeing one by one a lot of heavyweights taking the leadership move. It's just that all of them are not moving at the same time. So today Reliance is down when others are up. So overall, the view is positive on the index, and on the small caps, one needs to be still remain cautious.
Okay.
Right, okay, that's the take coming in the overall market construct. But Kunal, while we are climbing up to 23K on the Nifty, what's going to happen to the mid and small cap indexes? And you were saying that from the recent peak, we're already off 10% on the small caps, right? Is there more correction to go, or do you think they'll be back to joining the party?
See, it's not the traditional correction for mid caps and small caps, because after, say for example, a stock which has risen up by 2x, 3x in the last 1 year, if it goes through a 10-15% correction, we call it as a more time-wise correction, more of mean reversion for the indicators, not a major price retracement or a correction. And so is the case with mid caps and small caps. Mid cap index over the last 1 year, 1.5 odd year, I think has given returns almost 2x and more in that time span. So a retracement of 10% is more of a time-wise consolidation for the index. I believe sooner or later, I'm not sure when, but I think sooner or later the mid-cap index would start to participate and show signs of a breakout yet again. What we've also done is for both the indices, mid-caps and small caps, we've retraced back towards their individual 50-day moving averages. And that's a very good sign, because there was a divergence at one point of time of more than 15 to 20% higher from their respective 50-day moving averages. Those are steep divergences when a trend gets into more into an overbought territory. And once those divergences they correct themselves, that's where buying or demand gets regenerated into the indices. So I believe that we are now into a phase where the mid caps and small caps starting to look attractive, but whether they would come back to their previous swing highs immediately, I think that's something to wait and watch for.
The other thing to watch out for tomorrow would be the Amphi data. Again, I know Anisha will say that what's new in there. It will be a fresh record high.
I know, the same SIP figures which keep hitting
But
fresh
small
highs.
cap, mid cap.
The inflows?
I think the last 4-week correction, whether this month gone by, the small cap has been attracting bulk of the flows, right? Has this dip also attracted flows in small cap, mid cap? I think that will be tested tomorrow.
I have a feeling that February might still see sustained momentum. I think March onwards is when we'll see that dip, because that Amphi notice came, and I think bulk of the cuts have been in the last week. So maybe at least February might be another month.
Small cap index peaked out in mid-Feb.
And actually it's a truncated month in any case.
Okay.
So month on month
So
the
both
impact might be
Feb
there.
and March maybe.
Let's see where it goes, but definitely interesting to track that data. Separately, just wanted to highlight Cholamandalam Investment and Finance as well. That stock is up 6.5%. Axis Cap has actually upgraded the stock to a buy. They believe that the company is well placed and has a well diversified portfolio, adequate capitalization, and they're expecting the AUM to grow at a compounded annual growth rate of 21% for the next 2 to 3 years. Just highlighting it, specifically because there has been this entire debate of banks versus NBFCs, and there are select names which are still standing out because that stock is up 6.5%. Atul Auto is the other one. We did speak with the management. Remember, this is one of those companies where Mr. Vijay Keria has the investments as well, and he's infused further funds for the EV business as well. We'll do one thing. We'll slip into a very short break. We'll come back. We'll discuss these stocks and a lot more with our battery of guests.
All right, so while market is hanging on to very good levels right now, almost 74,000 Sensex, 22,500 on the Nifty, we have Shas Devalkar, who is joining us now from Axis Mutual Fund, Head of Equity. Shas, afternoon. Thank you so much for your time. I'll quickly come on to a point which we have been discussing last 15-20 minutes. Is that one of the factors of the market incrementally now that macros appear very stable? Yesterday, commentary from RBI in our special interview indicates almost closer to 8% GDP is what they are working for this fiscal. Earnings season has just happened. Elections, and by mid-March is when perhaps the dates would come out. I want to only understand, not even going in the direction whether elections is a factor for short-term or medium-term investing or not, but is markets already pricing in, or no matter what, when the dates come nearer, the event comes closer, the street would look at that?
So, it always we observed that when it comes to big events like election, market generally tend to move up prior to that, and in that context, the movement of the market in last 1 month, 3 month, more importantly, and the 6 month, if you observe, then yes, it is getting broadly priced in. And it's very difficult to time that whether it is going to get factored in per se as far as event is concerned before election or after election or not. But more important is one should look at it more from the calendar year 24 point of view. What next 3 months, 6 months down the line, budget, and after that, the developments within the companies and the announcements when it comes to infrastructure as well as investment in various sectors, including power, etc. So it's not going to be only about election. It is going to be about election, the actions taken post that through budget, and even by various ministries which are going to be formed after that.
Okay, point taken. I also wanted to understand from you, Shreyas, what's your view on this entire private banks versus NBFC debate? Because the latest, actions by RBI has made people believe that banks are better placed, and at least for the next 6 to 8 months, the trade should be go long private banks and maybe take some profits off the table for NBFCs. Your view?
Sure. When it comes to bank versus NBFC, it is more to do with the practices rather than since the banks has been governed by and more importantly, more regulatorily observed by RBI for a long time. While in case of NBFCs, in the broader set of NBFCs, that may not have been the case. In that context, if you look at why and where we are finding some issues, then in that context, if you look at the credit growth, which is mostly driven by the retail credit and unsecured, where there are multiple ways in which even the regulators are trying to judge whether this credit growth is and it is not in sync with the overall GDP growth, and then whether it should be that way, and whether this money is getting used not in the in some other activities like markets, etc. So when we look at this, then the trade is not about the bank versus NBFC, in my opinion. It is more to do with the practices and which are the attractive segments in that. So when it comes to valuation, definitely banks have underperformed a lot in last 1 year or so, and that is definitely one of the reason why they are performing. Actually, it's when we say bank, actually only private sector banks have underperformed, and in that also few of them. While at large in market, if you notice, the PSU banks have done extremely well, right? You notice that even NBFCs initially did well, and after that it underperformed. So more than calling out a segment like PSU versus private versus NBFC, etc., I would like to more focus on which end use or which end segment these lending entities are catering to, and the outlook on the credit growth in those segments along with the asset quality.
Right. Shreyash, the other thing we wanted to understand was whether there is a tactical call perhaps to have higher allocation or weightage to large caps at this juncture, because the overall view seems to be, I know it's a very case-specific thing, but mid and small caps at large are getting a little toppish.
So if you observe that already this trade is playing out, though we are not really able to observe it in that manner. So on a 6-month basis, now already the large versus mid versus small, the differential is 2 to 3%, almost 15% to 18%. That gap is narrowing now. So the large cap index is up around 15-16%, and mid and small is about 18-19% order. So that gap is getting narrowed. Actually, on the 3-month basis, mid and only mid cap is outperforming. And the large cap and small cap indices performances are same. And on the 1-month basis, actually, the large cap is outperforming both mid and small. So this trade is playing out. In that also there is one nuance that if you observe that at a broader market level, the PSUs, whether it is banks or it is any other PSU entities, they are outperforming a lot, and their weightages and respective indices are different. So typical mid-cap index would have 15% by weight PSUs, and that's where mid-caps, you notice that in last 3 to 6 months are outperforming the large and small. While in the large cap, that weight is somewhere around 10 to 11, while in case of small cap, typical benchmark indices, the weight would be around 5 to 6. So that is also one of the reasons. So if you notice X of PSUs, then it is getting the returns are actually closer when it comes to all the three categories. And that's where the asset allocation, by way of calling it out at large and versus mid versus small, that phase is getting over already.
Right. Okay, Shas, we'll let you go on that one. Thank you so much for joining us. We'll take a short break on that note, come back and put the spotlight on some of the pharma stocks, particularly the CDMO players, the likes like Laurus, Piramal Pharma and some others. There are multiple notes which have come in. Look at that, trading at day's high. Srishi will join us on the other side. Notes indicate that the proposed BioSecure Act in the US could actually mean brisk business for some of these CDMO players here in India, as they go, the big buyers over there start preferring Indian companies to Chinese. When we come back, we'll put the spotlight on that story.
Welcome back. Well, Tata Chemical continues to hold with a gain of around 12%. IFL Finance is up 10%. Force Motors, which was down yesterday, is seeing a bounce back of 10%. Century Textiles, Infibeam Avenues, and then the entire Tata group of companies, they're all fairly active in the trading session. But just wanted to shift the focus and talk about the pharma sector a bit. Indian CDMO players are in focus after the US House Select Committee voted in favor of the draft US BioSecure Act. What is the act all about and how will it impact the CDMO players in India? Shrishti is joining us with the analysis. Hi, Shrishti.
The US government is actually working on a Biosecure Act, and the analysts believe that this could actually help the Indian CDMO players while they replace the Chinese CDMO players, which could be at threat. Now, first understand that what is the recent development. So back in 25th of January, the US House Select Committee introduced the Biosecure Act. Now, this was a draft bill, but yesterday the committee voted 11:1. Now, 11 favored in the favor to move forward with the draft legislation. This is still not into play, but let's understand what it is about. So, Biosecure Act was introduced in a way to attempt to de-risk sources from China, because the government believes that there could be a threat because the Chinese political organizations could actually have access to the genetic information of the American citizens. And in the draft bill specifically, a company named Wuxi Aptech was actually mentioned as a national security threat to the US. And in the trading yesterday on the bourses, this particular company's stock was also down by 10%. Now, how can this actually help the Indian CDMO players? Then analysts believe that while the US government replaces Chinese CDMO players, the Indian companies are there to actually benefit from that. But apart from that, a lot of these MNCs have raised concern that since the contribution and the dependence on the China for the APIs and CDMOs is so much heavy, that the replacement will take a lot of time to get into play, and this could actually hamper the production lines as well. Now, Kotak has estimated that the CDMO industry of the China is actually $30 billion and Indian industry is significantly lower. Now, even if the bill is shelved, then this could actually indirectly have positive ramification on the Indian CDMO players, and they have highlighted that stocks like Divi, Syngene and Laurus are some of the counters that could benefit in the long run because of this act, and if not, then because of the concerns that are raised in the long term, indirect benefits could be there for these companies. Back to you.
Right, Srishti, we'll leave it at that. In fact, we're going to quickly take it across to Ansh. But before that, let me take it across to Sudeep Bandyopadhyay. Welcome him on the show right now. Sudeep, hi, afternoon. Good to have you as always. Can't take your eyes off from the Tata Group names, can you? I mean, with all the talk around Tata Sons, look at the move on a Tata Power, Tata Chemical, Tata Steel. I mean, you name any group company that's holding up.
Absolutely. I think, Asha, the buzz around listing of Tata Sons is gaining momentum. considering the timelines suggested by RBI in their when they came out with the new set of regulations, I think there is a strong speculation that Tata Sons will get listed in the near future, and the best way to play that will be probably through Tata Chemicals. That's the conventional thinking in the market, and that led to this kind of massive rise in the share price of Tata Chemicals. The other companies are also benefiting from that halo effect, I would say. I'm not saying they're not doing well, whether it's Indian Hotels or Tata Power, Tata Motors, all of them have their individual reasons for getting a good valuation and doing well. But I think this is the halo effect of Tata Sons IPO, and its effect, what it can have on Tata Chemicals shares and shareholders. So pretty much that's what it is. If somebody has to really look at the Tata Group, I think I would think Tata Steel is still the best possible buy. The way the steel industry is poised, the way the global steel manufacturing and demand is shaping up, the way the Indian strong demand of steel, considering the massive infra and construction spend which we are witnessing now and likely to witness in the near future, I think Tata Steel at current level definitely is a good long-term buy.
Okay, so that's a view coming in as far as the Tata Group of companies are concerned and what's happening in that sector. But let me toss it to Naresh as well. Naresh, within the Tata Group of companies, which is the stock that is top of the pecking order for you?
So it would be Tata Steel. That would be the first one, which has finally hit a new all-time high. So good momentum here. Then there is Tata Communications, which has again made a new all-time high. These are the two names which come up. Tata Chemicals has already moved up quite a bit, so that is something which I would avoid. So for now, it is at current levels, interesting bet would be Tata Com and Tata Steel.
Well, the flasher which is coming on your screen seem to be indicating some deviation of processes leading to a 820 crore IMPS scam. IMPS, remember, it's a manner of transfer of money, just like RTGS. And CBI apparently is conducting searches over 62 locations. It's not fallen a whole lot, just about 1%. It'll be yet.
Because you can
the
see
process
a downtick
of the fall
happening,
has started.
But maybe it's just started because anything related to a scam of sorts has a good track record, whether it was PNB and the others as well that we had seen. It was a recurring
For all
issue.
you know, it may be a 10-year-old issue and the 20-year...
Actually 2024, and I'm just
24,
running a
is it?
prima facie Google search right now. It pops up as 2024. We'll of course have to dig deeper.
We'll definitely have to. But talking of big falls and regulatory action, Sudeep, you run an NBFC, you've worked in one and you have obviously invested in many. This entire crackdown, maybe crackdown is a slightly stronger word, a kind of a slight nudge, as RBI Governor himself kind of alluded to it, not any strong action. But the market actually corrected froth from many of these NBFCs. Talk about Bajaj Finance, IIFL Finance, JM, many others. Some fell in sympathy, which had nothing to do with some of the most conservative names from the south also fell. Would you recommend buying any of those, utilizing this fall and getting into some good names?
The regulatory action on India Infoline, I think Muthoot and Manappuram definitely were good buys, and I think they continue to remain good buys. Look, the restriction on IIFL definitely benefits Muthoot and Manappuram. So I think out of the two, Manappuram, considering the valuation, we think it is interesting at this stage. As far as other NBFCs are concerned and the RBI action is concerned, obviously the action is on the back of non-compliance of regulations and some kind of violations which RBI is cracking down on. This will, in the long run, bring much more discipline, and I think it's good for the industry overall, structurally in the long run. Of course, when some action like this gets taken, the shareholders gets nervous, and the price correction, price action permeates across the industry, and sometimes it looks unfair. So some of the stocks, as you rightly said, which corrected, had nothing to, no reason to correct based on action on JM or IIFL. So obviously that was overdone, and it's coming back. But if I have to buy an NBFC, I think still I will go for Manappuram at this stage. I don't think other NBFCs, considering the valuation, they're doing good work, but the valuation at this stage looks full in most of the cases.
Taken, so still like Manappuram, and of course, let's see what happens of the NBFC sector. But in the meantime, let's take it across to Ansh to get a sense of the price volume buzzes at this point of time. Hi, Ansh.
Hi Anisha. So Tata Power will be the first stock in focus as the stock seems to have given a good decisive breakout from its upward sloping resistance trend line, hitting record high level as well. The breakout was supported with heavy volume of up to 6 times its average trading volume of last 10 sessions, registering its biggest single session gain in at least 3 months. Apart from this, M&M will also be in focus as the stock has given a breakdown from its upward sloping support trend line along with good volumes of around 6 times its average trading volume of 10 sessions. It has also formed a bearish engulfing candlestick pattern on weekly time frame, which usually indicates a potential reversal in trend on downside. Lastly, Chambal Fertilizers will be in focus as the stock seems to have given a good breakout from its falling wedge candlestick, falling wedge chart pattern, surpassing about 20 DMA, advancing for 4th consecutive session. Also, it has registered its biggest single session gain in over a month, along with good volume of around 5 times its 10 session average trading volume.
Point taken. Thanks so much, Ansh, for joining us. But in the meantime, let's also play a small slice of the conversation we had with the Nika management, because they were talking about the improving profitability going forward as well. Because that's a big question that everybody wants to know, that there has been an improvement when it comes to the beauty segment. But what happens of the fashion segment? Listen into a small slice of that conversation.
So, you know, what happens is Nika is a very, very diversified business now. True. You may still think of us as a cosmetics online retailer, but as I told you, we are a beauty retail platform online, largest. We are also today largest offline retailer of beauty. We have our own brands. We have 28 of our own consumer brands. We have a fashion business. We have a B2B business. So we are now a collection of businesses. If you look at each of our business segments individually, if you look at our beauty business, our fashion business, and our other segment, which is how we report to the market, each business segment has improved its own profitability meaningfully. If you look at in the last 2 years, the beauty business itself has improved its contribution margin by over 600 basis points. The fashion business has improved its contribution margin by 200, 300 basis points. And the other segment, which is our B2B business, there the losses have halved in less than a year.
Back with closing trades right here in ET now, and the week is finishing off quite okay actually. 22,586 on Nifty futures, so almost there at that 22,600 mark at least, and that's not really bad. We're on course to achieve 23K hopefully soon. But Sharad is here to tell us all about how the FPI flows have been for the month of February.
Well, in focus is the FPI allocations and the flows which the month of February, and the FPIs had turned net buyers with inflows of almost $186 million. Now, importantly, the selling was seen in 7 out of the 14 sectors tracked as per the NSDL, and 2 segments actually stood out. The telecom segment, they saw outflow for the 4th consecutive month, while if you look at the capital goods segment, they have been getting inflows for the 12th straight month. Now let's look at the flows, how they have moved, and of course the top 3 inflows if you look at the month of February. Consumer services comes at the top with almost $908 million of inflow, followed by auto and healthcare segment where the ranges between 627 to almost $670 million. These are the top 3 phases on the inflow side, but on the outflow side, if you look at it, financial services, more than $1 billion of outflows have been coming in for the month of February, followed by the construction and the FMCG segment. Over there also the inflows have been more than $500 a piece. Also, apart from the flows, what the allocation trends suggest, and as per the broking reports, FPI allocation in oil and gas segment, that has actually risen for the 3rd month in a row. Also, if you look at the allocation in the logistics and the real estate segment, that has actually come at its highest levels for both the segments since January 2018. And interestingly, the FPI allocation in the pharma segment, that is also at its highest level since September 2020.
Okay, so that's the FPI flows, and that's the flow for even Tata market cap today. It's risen by as much as 62,500 crores, at least for the entire group. So definitely something which is catching attention of many. But just coming back to the conversation regarding what's happening in the new age vertical, of course, we've talked about, Paytm at length, Sudhi, but what about the other names, Delivery, PB Fintech, Nika? You just heard the commentary from the management as well. And even Zomato, it's currently around at what, 160, 170 bucks. Do you see it trending higher?
No, absolutely. I think if you see the new age companies, I mean, leave aside Paytm, I think the realization came pretty fast that in the listed space, profitability is extremely important, and without that, investors are not going to like and give the valuation which they are demanding, and that's why there was a course correction by pretty much all these companies, and we've seen the results. I mean, as far as Nika is concerned, I always believed that the beauty and fashion is one segment, one part of business which globally has been doing very well. We all know of LVMH, the one of the richest companies and one of the top performing companies for the last 1 decade almost, and the owner is one of the richest persons in the world. So if you are in similar space, pretty much in an organized and structured manner, you're bound to do well. And Nika is getting its act together. I heard the commentary, and we are seeing in the market the performance improving. So I think long term, I think it's a good story. As far as PB Fintech is concerned, again, insurance is an area which is grossly underpenetrated in India. And as far as their PB Fintech, I think the only company which has till now successfully digitally started sourcing insurance in a big way. And I think that puts them in a unique position. The performance parameters have been improving dramatically, and I think again they have a good runway. I'm also positive on delivery. I think again this is an age-old business. I mean, logistics is 1,000-year-old business. They're just trying to bring in technology and do it more efficiently. So yes, once they get their act together, I think that's also going to be an excellent company. They haven't performed well as far as the quarterly numbers are concerned for quite many quarters, but I think this may be the time for the investors to start getting into delivery, because the turnaround may come very soon.
Right, okay. We were just discussing, Anisha and I, what if those news reports that Reliance is getting to get Primark into India, if they are true, we're just wondering what's going to happen to all these retailers. But anyway, since we're on the subject of retailers and talking about e-commerce, Flipkart could actually be the latest entrant to the quick commerce segment. The e-tailer is likely to foray into quick commerce. To take on the likes of Zepto, Blinkit, Swiggy, Instamart, Astha is here with more details.
Quick e-commerce market, that's Flipkart. Flipkart is coming with the services which can deliver your goods in another 15 to 20 minutes at your doorstep. Of course, it's a competition to Swiggy, Instamart, Blinkit and Zepto as well. So it will be the platform which can deliver your commodities in next 15 to 20 minutes also. Flipkart is likely to launch these services in 12 cities and in next couple of weeks, in like 6 to 8 weeks as well. Earlier, Flipkart started its 90-minute services called Quick, but later shifted its focus to delivering the commodities in next 90 hours, another day. But now it's focusing on delivering the commodities in next 15 to 20 minutes. The plans to make the instant delivery services available at some selected locations also, and it can start its services by the May at this year in 2024. Of course, it's a very big player coming in the market. Also, it was in talks to explore options and acquire the startup of instant delivery app, that is Dunzo, but now it has started its own services coming into the picture, which can deliver the commodities in next 15 to 20 minutes as well. So it's a big competition for the other delivery apps as well, but Flipkart is coming into the picture right now.
Okay, so that's about Flipkart and the kind of impact it's going to have on Zomato perhaps, because there'll be more competition in this quick delivery service as well. But overall for the markets, we have cooled off a bit, so we're below the mark of 22,500. Bank Nifty continues to be under pressure. In the last few minutes, there haven't been big movers as such, but just taking stock of what's happening at the index level itself in terms of the buzzers. It continues to be Tata Consumers actually, which is now perking up. That one stock was actually quite muted to start the trading session with. It's sitting at the highest point of the trade now. Tata Steel was as it is doing well. You have Bajaj Auto, JSW Steel, Tata Motors as well in focus. Reliance actually, that heavyweight is coming under pressure. It's down about 1.7%. Kunal, comment on the charts of Reliance. It hits that 3,000 rupee mark and then comes tumbling down again. What's happening here?
Consolidating. I think the stock is just about going through a range. Nothing much in terms of chart trends which have changed for Reliance Industries. In fact, the volumes today on the cash side is a bit lower than the volumes which were seen yesterday when the stock was trading above the 3,000 levels, both on the F&O side as well as on the cash side. So that also indicates that it's probably selling on the back of slight lower volumes, but nothing major in terms of the chart trends which have reversed for the stock. It's still above the 5-day swing low, which is a key parameter which you look out for in terms of strong uptrends which the stock builds into. So I think now the previous short-term support is closer to 2,900, 2,920 mark for Reliance Industries, and it's still almost 1.5 to 2% away from those levels.
Okay, let's see when we hit those levels. Just wanted to put the spotlight on Tata Power and Tata Consumers again, because both of those stocks are reacting and continue to react to major news flows as well. Tata Power, for instance, is up around 8% as we speak, and Tata Consumers too is almost hitting that 4% mark. Specifically, I know we've discussed the Tata Group at length, Sudeep, but if I had to ask you, let's say about Tata Power and Tata Chemicals, because Tata Chemicals has a solid run this week, what would be your comments on these two stocks, Sudeep?
Well, as far as Tata Power is concerned, we do like Tata Power. In fact, there's all these power producing companies who are predominantly thermal power. They are transitioning beautifully into a mixed company, which is they will continue to have thermal, and they're also setting up massive green capacity, green energy capacity, and Tata Power has been doing that. The green energy part is very interesting, and that's coming up pretty well. As far as the entire power sector is concerned, I think the demand is robust. And the only challenge as far as Tata Power is concerned was the Mundra, but we believe that also is getting close to resolution, and that should do wonders for Tata Power's balance sheet. On the whole, we like Tata Power, but if I have to pick up one stock in this space, it will continue to be NTPC. We like NTPC over Tata Power, but Tata Power will be the second pick. As far as Tata Chemicals is concerned, I think they have done phenomenally well over the last few quarters. I'm not talking about stock market performance. I'm talking about financial performance. I think they have done pretty well. Their soda ash business has been doing well. Now the question remains the excitement as far as current excitement. I think that's pretty much on the back of Tata Sons listing, because Tata Chemicals will probably benefit the most if that listing happens.
Okay, point taken. So that's a take coming in on a couple of these Tata companies. But time now to take the BDSE trades. On that note, Sudeep, we let you go. Thanks so much for joining us and have a nice long weekend. But Nuresh, what are the BDSE trades for coming Monday?
So first is the buy on Tata Steel, stock hitting a new 52-week high, stop loss at 155, target price of 165. Second is a bounce back trade on PVR Inox, stop loss at 1400, target price of 1460.
Okay, so PVR Inox is a buy, though that stock has been pretty much sideways for a while. What about you, Kunal?
So I'll go with ICICI Pru as the first stock, which suggests a buy for a target of 610. So expecting another 30 points on the upside for the stock in the very near term. Stop loss to be kept at 566. And second is a buy on graphite. That's another chart which is showing signs of a classical breakout. So on multiple time frames, monthly, weekly, daily, as well as on the hourly charts, the stock is showing classical signs of a breakout. So which means that it's a stock which looks very attractive from both short term as well as medium term time frame. 660 could be an immediate target for graphite, and stop us at 616.
Right, okay, let's begin winding up